Hi, and welcome to insidetracks.co.uk. We are a website and YouTube channel dedicated to looking at Betfair trading and trying to help you trade smarter and make money, obviously. We also do a newsletter, which is free, which is up to do with hints and tips for the day's racing, so that you can pick out and use the knowledge of the team to actually go to some races which might give you some good trading opportunities. We've got a lot of videos actually for you, lots of different things, but if you're a newcomer, then try some of the earlier videos which look at what Betfair Trading is and so on. But I'm going to do a bit of that in this video now. So what I'm going to try and do today is to look at the one strategy that if you follow it to the letter, should be able to make you enough money to make your holiday that you normally take into a luxury holiday. And I'll show you how in just a few moments. So if you like this video, please like and subscribe. You can subscribe to the newsletter by going to the website. It's all free. And of course, give comments and feedback as you see fit, or ask any questions. I generally answer them, no problem. So what we're going to do now is have a quick look at some of the basics of what is a Betfair, what is Betfair trading, and why can you make money out of it. Right, so here we are at the Betfair Exchange, and we're looking at a race, normal race Thursday night, and we can see that at Sandown in about 20 minutes or so, we've just had £37,000 matched. And what does matching mean? Matching means that someone has said, yep, I'll take this price here, or yes, I'll take this price here. Now, on the blue side, which is what I've already done, I put in a £5 bet at threes, just hoping to show you what happens as the price drifts or comes in. But what I'm obviously trying to do here is to get a better way at 2.98. So let's just do that and just show you that how you can actually make a little bit of money on the exchange. So here we have a situation where I've put in a bet at 3.0 just before I started this video, and what I'm trying to do is just scalp it and at a lower price, and then make a very small profit. Actually, it's £9.90 liability there and £10 profit there, so I'll make a 10 pence profit. And it looks like that's going to should get matched. Looking at the way the exchange is going, it might, yeah, actually it probably will, yeah. So there we go. It's just got matched, and you can see that I've just made a 10 pence profit on that trade. Yeah, very small trade, very low risk trade. Even when you saw the price go up to 3.1, it was a relatively low risk trade, and I've taken what they call a tick out of the market. I've scalped it. In fact, I didn't do a very good job because I'm doing this video, because I left it a little bit long to scalp it. But anyway, it is scalped fine. And if I wanted to cash out now, I could. I've got 10p in there. And what the exchange does is it says, well, the prices are around about 2 to 1. So what I'm going to do is I'm going to give you 3p if you're 10p. So basically it's saying, 3p all round. So I can do that. In fact, I don't think I will, because I'm not that bothered about it, but that's what you do with scalping. You then cash out, right? So that's the theory behind an exchange. You back it at one price, and you then lay it as if you're a bookmaker at a lower price, and you can then take the difference, the 0.2, which is called a tick. That's one tick, 0.2 in this particular area, and whatever your stake is, then it multiplies up by your stake. So it's 0.02 times £5, which is 10p, and then you can cash out based on this price here. Okay, so when do you want to start scalping a market? It's called scalping, so I'm just going to give you the background to scalping. So you want to scalp a market about around about this sort of timings, 20 minutes to just below 10 minutes before the off. Why is that a good time to start scalping? Well, I'll just show you. Here's the charts, and what you can see on the charts is that even though this horse has gradually drifted out to that 3.1 and gradually come in, there isn't a huge amount of activity in terms of great big jumps around. It's relatively small. You can see these small little batches here. So what you're looking for is a horse that has this kind of profile, not exactly this one. I prefer a horse with a more stable profile. In fact, I would prefer a horse which is coming across like this all the way, which is little ups and downs. That's what I'm looking for. So if it has been 3 here and carried on being 3 with these little tiny jumps, that's exactly the sort of horse you're looking for. The other sort of horse you're looking for, well, the other criteria for the horse is you multiply this number here, which is his last match price, just below 3. So let's call it 3. And this amount, which is on this selection, 24. So doing 3 times 24 is about 75. And in fact, there's only been 56 on the whole race to date. So I'm looking for a horse which we call then that is called an overweighted horse. 3 times 24, 75. Let's not argue, it's 70. So it's well above the 57. At which point, the higher above the 57, the more overweighted the horse. Now, what that means is that you don't get so much variation in here. If it's overweighted, it doesn't jump around on you. So, and therefore, it's actually low risk, because if you're in this situation where it's flat, it's only moving up, down very, very slightly, you can take a ticket out of the market very easily, and you're not going to suddenly find yourself exposed to a great big change. You backed it at 3 and it suddenly comes down to 2.5, and you lose money. If you backed it at 3 and it goes down to 2.4, so you're not going to lose a lot of money, and by the way, then it's going to come back up again as well. So you're fine, and that's what you're looking for. So that's the background to scalping a market. You're looking for a horse that you want to scalp that is overweighted, and that has a steady state, what we call a trading corridor. The trading corridor is the lowest it's traded and the highest it's traded. You want that trading corridor very, very narrow. And so an overweighted horse, a narrow trading corridor, about 20 minutes before the race. Okay, so that's the theory of scalping. Now I'll move on to the strategy that I think you're all waiting for. So the strategy involves looking at not only the horse, which we just discussed, a horse that's overweighted and in a narrow trading corridor, but you also want to know what range that horse is being backed at to maximize your scalping returns for the stake that you're going to make. Okay, so this is a chart which should help you. If you could take a screenshot now, that would help you as well. Or you can go to the website, and this is on there for you. The stake is changeable, so you can change that to £10, and it will immediately change the amount that is coming out. So you can put a 10 or 50 or 25 or whatever you want to do in there, and it'll give you the amount. So let's go through this. The range. Very rarely is a horse 1.01, but certainly in the range of 1.01 to 2. If it's in that backing range, then a tick is worth 0.01. Okay, so 2 to 1.99, 1.99 to 1.98, etc. So it's 0.01. At a stake of £100 that you're going to bet at 2 and then lay at 1.99, you would be making £1 every time that trade happened. As you saw me trade a moment ago. Every time that trade happened, you would get £1 into your pot. You saw me getting 10 pence into my pot. So if I did a trade 2 to 1.99, £100 backing it at 2, £100 laying it at 1.99, both those bets were matched, then I would wind up with £1 in my next door to the horse in green. And then, as you saw, it would give me the option to cash out. And if it was at 1.01, if that was the price, then in fact I can cash out £1 for 99p. But that is so incredibly rare, it's unbelievable. However, the minimum, which is if I did that bet at, as I said, 2 to 1.99, it would give me 50p every time I did £100 bet back, and then £100 lay, and got one tick in my favour. So 50p. So and then I've done the same here. So between 2 and 3, the tick is worth 0.2, 3 and 4 it's 0.05, 4 and 6.1, 6 and 10 0.2, and 10 and 20.5, and so on. Now, what we see in this is that actually, as we move down the table and start backing and laying in these ranges, so the value of each tick goes up. Now, obviously, it's £100 stake, which is quite a lot, and you can change that. But I did it because it's a very round figure, and it shows the sort of what I mean. But you can see that as we move down, so one tick realization gives you a higher and higher return. Now, you are very unlikely in any race, for instance, to have a horse at, say, 60 and put £100 on it at 60 and then hope to get a £100 lay at 55. That only happens in things like the Grand National and the Derby and other horse races where there's a very large amount of money being traded. But that is actually one of the parts of this strategy, is that you get the maximum returns actually in these areas here. In the max, if you traded a horse at 10.5, £100, and then laid it at 10, £100, and you made that click, that tick with £100 bet, then the value of that tick is actually £50, which is huge. Then at the bottom end of the range, if it's being traded at 10, that £50 is actually worth £5 with no risk. You can cash out at £5. So in a race, I mean, and 10 tens is 9 to 1. Okay, on Betfair, always take one off, and that gives you the odds. So 2 is evens, 3 is 2 to 1, and so on. So 10 is 9 to 1, 20 is 19 to 1. So how many races, particularly the big ones, big betting races, the classics and other big handicaps and Saturday races, group races and so on, how many of those, particularly with large numbers of runners, wind up with horses at 9 to 1 or more, or thereabouts? And on Betfair, 10 or more. There are quite a few. Now, obviously, in the bigger races, small races, liquidity sits here. So liquidity, let me explain liquidity. Liquidity is, I want to bet on that horse. Here's a £10 note. In a race where there is virtually no liquidity, no one is willing to bet. It's like going to an auction of two people. Are you going to get a very good price for your lovely antique when there's only two people in the auction, or are you going to get a lot of money for your antique if there's 1,000 people in the auction? Of course, the more people who want to bet on a race, the more liquid it is, the more opportunity there is to bet at the right price, because there's always going to be somebody around the corner who thinks that this horse is going to do better than you think it's going to do, or worse than you think it's going to do. And so liquidity in an evening race like tonight, with 60,000 on the race, as we saw 20 minutes before the off. And we'll just go back to, well, we won't go back to it, but I'll tell you how much will probably be on it. It'll probably wind up with something like £250,000, £300,000 on a Thursday evening race at 6 o'clock. So, but on the Derby, you've got 3 million or 5 million, something like that. So it's an order of magnitude hugely bigger. And therefore, liquidity starts in the Derby, for instance. The liquidity goes right down through the odds, and so even the outsiders are getting a decent amount of money being bet on them. And that's the key. You want to be in this area here. This is where you get the maximum return. Look, the maximum return in the next level up is only £5. The maximum level 30 to 50 is only £6.67. And then you have to go up to the 50 to 100 one to actually make more money, and then it peters out there. So actually your maximum return is here. This is your maximum return, 5 for the liquidity and the risk that you're taking. So what you should be looking for is races, therefore, as we discussed, 20 minutes or so before the race, maybe a bit longer, in fact, in big races. So maybe 30 or 40 minutes before at the Derby, for instance, you're looking for a horse that is in this area, 10s on Betfair, maybe 11s, okay, 10 and 11, maybe 12. You reduce this amount, but then you have more opportunity. And then you're looking for a horse that is slightly overweighted. So that doesn't often happen, but yeah, you can find it, and also has a very narrow trading corridor. And you can then scalp. And if you are a bit less gung-ho than me, and you want to do £20, then every time you make that scalp, you make £1. So every time, if you're doing it, say 20 minutes before the race, and you're doing it for 10 minutes, you may well get 6 or 7 scalps in, maybe more. That means you've got the chance to make 6 or 7, 8, 9, £10 on that race, relatively risk-free. If you want to be a bit more gung-ho, and you do 5 or 6 at, say, £50, 5 or 6 at £2.50, and you're making what, £15. So you can make £15 cashed out, no risk, before the race, on the Derby, scalping in this area on a horse of the description I've made. Now what we're going to do is just see what does that mean. So what do you want to do? What's your objective? Well, if you want to focus on trading, you can, and that's okay. And you can do the trading, Thursday night, 6 o'clock. But you'll have to be trading something that's liquid, maybe 15, 20 minutes before the race, as I described to you before. And because you're going to be trading in the sort of 2 to 6 range, you're not maximizing necessarily your returns. But if you want to focus, that's fine. It gives you more opportunity, but slightly lower returns. And you can say, okay, I'm going to focus. How many weeks am I going to do this for? Well, there's 52 weeks in the year. You're going to take 4 weeks off for holiday, another 4 weeks for doing other things. So let's say you do 36 weeks. Number of days per week. Well, you're working probably, or maybe part-time. You want to do it at the weekends. That's 2, maybe a couple of evenings. So let's say 4. And what's your target for the day? Well, we've just shown you that relatively straightforward. You can make £10 a day, or £10 a race. So let's see what that does. So in the end, if you want to focus on this 4 days a week, and have £10 a day as your target, so actually you're really only doing maybe a couple of races a day, and you're talking about, in a year, £1,440. Going to do it just part-time, maybe 20 weeks a year, 2 days a week, £10 a day, and you got 400 quid. If you up this to probably something that you could actually quite easily do, then of course you're talking about considerably more money. And if you want to up the days and you want to up the weeks, that's entirely up to you. So look at what you think. As I've just shown you, if you're in sort of one of the big races with lots of money coming on, one of the classics which happen regularly, just choose those days to do it, and then scalp those races. As I showed you, doing £20 a scalp, and getting 6 or 7 away, you can get £20 a day, no problem out of that. So I don't know whether you could have a decent holiday, but I don't know what you spend on your holidays. And if you could add £2,880 to the pot, I think you could up the level of luxury, even if you added just £400 to the pot. That would probably make it a much more considerably enjoyable event. So Betfair is a place where you can use a strategy such as scalping. You can choose the right horse, you can choose the right timing, you choose the right race, and you choose your stakes, and you choose how often you want to do it. But ultimately, scalping can deliver you regularly small, relatively small gains, but you can do them regularly on a race, as I said, and you've seen. I made 10p without even thinking about it. That's fine, but I only put a £5 on, £20 on. That's 4 times. That's 40p. If I do that 10 times before the race starts, that's £4. That's £4 I've got at relatively low risk that I can then cash out, and I can take £2 of it back probably, maybe £1.50, whatever. But and that's doing it without even thinking about it on a race on a Thursday evening. My advice to anybody who's new is to wait for the big races because the liquidity is so much higher. Choose the betting range. 10, I say, is your best range. So around 10 or 11. Find a horse overweighted with a small trading corridor, 30 or 40 minutes before the race, and just scalp it, and keep scalping it until you, and actually just be aware of how it's going. Be aware, don't put too much on, don't have too big a position. Always try and get your back bet away before your lay bet, because the lay bet exposes you to more risk. So always, if you're going to start scalping something at, say, around about 10, try and back it at 11 and look to try and scalp it at 10.5, or back it at 10.5 and try and scalp it at 10. That's my advice. If you see it drifting out of its or shortening out of its trading corridor, then stop your scalping. Trade out your position, try and keep in the positive, but trade out of it even if it means taking a very small loss, and wait for it to come to another trading corridor before starting your scalping again. Okay, if you like this video, like it and subscribe. Don't forget the newsletter, which you can come to. I'll just show you that very briefly because it's actually quite interesting. So you can see this is the newsletter you get, and today this is what we napped. Bashosh, unfortunately, was in a 3-horse race, bit tactical. He didn't have the turn of speed to make it. He was probably the best horse in the race, but he just couldn't get it back. Aquaman won. My little tips, it's a back to lay, which means you back it before the off, and then it gives you a return during the race. That was fine. Give it some Teddy. Lost, which is my lay of the day. I always look to see what needs laying, and the long shot Raven's Arc also won. So I think and Big Boy Bobby also won. So you have a newsletter here that can give you, well, let's see, that's a winner, that's a winner, that's not, that is, and that is. So not too bad. 5 out of 6 today. It was only 2 out of 4 yesterday, but it gives you a good feel for where you might see some trades and where you could actually start thinking about what you want to do. But it's a bit more sophisticated, and it's for traders who want to do different things apart from just scalping. Okay, that's me. I'm finished now. As I said, subscribe, like, and sign up to the newsletter. Cheers then. Bye-bye. Best of luck.